Dear traders, this is Albert with Trading Diary, and today I would like to welcome you to a discussion about FOMO. Yes, exactly. It's this feeling you get when you see the stock moving, price moving up or down in your direction, but you cannot get in, and you go like, I wanna be in this stock now. And then you take position, and then it moves around and it goes against you. This is what most of the time is going to happen, has happened to me. And this is why I did not get in yesterday in the stocks that I was observing. So let's go and have a quick discussion about the overall markets. And then let's have a look on the three tickers, on the three stocks that I was watching yesterday and on which I felt quite a lot of FOMO, in fact. But discipline won, and I was sitting on my hands. I did not react, which is really, really nice. Anyways, let's get amongst it, shall we? So SPY here, I've been really cautious. I had like one or two positions over the last in this week, and I got stopped out at break even every time. So I think we have put in the lows here on massive volume here. I think we will not retest this level. We made a higher low here on 1/3 of the volume, which is really nice. And we've been running up for the last couple of days, like kind of 1.5 weeks, 2 weeks here. And I was observing this point here as it was running into the 50 EMA. And we can see that it kind of tested 3 times, 1, 2, 3. And today it gapped higher, it gapped above, but it is running now into the 200 EMA. And I think that this is quite a bit of resistance. So this is why I'm really cautious. I'm rather observing. I'm passive. I'm sitting on the sidelines and I am observing. Let's see what it does. Let's see what it does tomorrow. Let's see what it does to next week. And I can always get into a position. There is always some stocks moving, so I'm not really concerned about that. So that's the overall market, S&P. And now let's discuss the 3 tickers that I was observing yesterday. So first one, RGC. RGC has been on my watch list for a couple of weeks. I got in here, stopped out for I think break even. I got in here, stopped out for a loss or break even. And I missed it here on this day as it moved up. And I missed it yesterday. And I missed it yesterday because volume was too low. So I saw it when it was up here in the 41s, 42s. This is when I saw it because I went just through all the positions on my watch list. And I saw that it was running. I got like, no, FOMO got over me. And I was observing it, and it got halted like at least once, twice, 3 times. And then I thought about getting into here, taking a position here, but I was not sure because volume was so low. I think we were at some point 0.3 times the average volume, and this is just not enough. I want big volume coming in on breakout, really massive volume, which would confirm that bigger institutions are interested in the stock and are getting into it. And this did not happen. So I sat back and I was sitting on the sidelines. However, I would have got in here. Definitely I would have bought it here. And I think in future I should implement alerts, in fact, right? Alerts as it moves over this price level. Boom, it triggers an alert. I get an alert here, and then I can pull up the chart and I can decide or put it on the sidelines on another chart, on another screen. I can observe it as it is moving, as it is perhaps setting up, and then I can get in. So this is what I will change in future. I will implement more alerts. definitely. So this was RGC, getting sweaty hands. This was, and like when it opened here, this was a 100% move. Really nice. Really nice here on RGC. These are the stocks I want to be in, right? I want to be in there. So today it gapped down overnight, opened lower this morning. It's been moving up, but again on really low volume. It's about 11 o'clock in New York here, and we are at 0.1 times the average volume, which is really, really low. It's not enough. Let's see what it does up here though. Let's see. Perhaps this is going to form a cup and handle pattern, or perhaps kind of another wedge like this one, a VCP pattern here. So drop down here, goes here, then it goes around 39 level before then breaking out again. So let's see. This is really early in the move. Like here on the weekly, we can see it's a really beautiful flag here. Really beautiful flag here on the weekly. Oh man, it's a shame that I missed it. But I also have got rules, and I told myself that I need to be more disciplined and I need to reinforce my rules. And this is what I did, and I'm really proud of myself. Really proud. Anyways, so this was RGC. The other one is CEP here. So and again, building flag here, flag pattern here, pulling back. I would have wanted to put in another day on low volatility. Small price action, perhaps inside day here. And today I would have gotten into it if it was going to break out today. Definitely. But it broke out yesterday. And what I did yesterday is that I measured the distance, right? From the previous day to the 10 EMA. And it's about 24%. And this is too much. I wanted to be closer to the 10 EMA here. And then I could have got in. But I didn't. And it's a bit of pain in the butt because it moved about 60% in 2 days. 60% in 2 days. These are the stocks I want to be in. Definitely. So anyways, I think I have to reconsider my entry level, or perhaps the definition. Let's see. I have to backtest this. I have to define it better on these flag patterns. Which is the distance that I do accept from the 10 EMA. So this is CEP here. And the third one was ODD. ODD here. Gap up on earnings here. Gap up on earnings. And this was a tough one because I saw it quite early here. I saw that there was massive volume coming in on the open. But my risk to the low of the day would have been about $5. 5 points. And this is, my total risk is about $50 per trade. So I could have taken 10 shares, which is not a lot. So, but then 14% move within this day. And now we are about 14, 15, 16% perhaps. For 10 shares in dollars, this would have been like $8, let it be $9. So about 10 shares, $10 each would be $100. It's not really worth it, I guess, in my opinion. So risk, I couldn't take enough shares for my risk level. Okay, and this is why I did not get in. So let's see today. Today was $2 of risk. I didn't get in. Let's see what it does here. How it's going to behave. I'm not taking any position here today. I might take tomorrow. If it's like going sideways for a bit here, today, tomorrow, perhaps, and then I will perhaps take a position. Also depends on what the overall market, S&P, is doing. Okay. So these are the 3 stocks that I was observing yesterday, and I'm really happy and proud that I could sit on my hands and I could observe it, although I really would have been in RGC. Really, 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 really. But, once it goes, risk management is really a hard thing. How Where should I have put my stops? I couldn't find a point to put my stop. So I'm not taking it. It's about cutting out all the unnecessary losses. All the unnecessary losses. All the losses which are because it's not my setup. Because one of the points of that my setup needs is not satisfied. And this is what I'm avoiding now. So I'm getting more and more disciplined about taking only the strongest setups, only A+ setups, only all the setups that satisfy all the parameters, all the characteristics I'm looking for. And if this is satisfied, I'm getting into. If not, I'm letting it go. There's other stocks. There is enough companies out there. There is enough money out there. There's so much money out there. Every day things are moving. So I'm not worried anymore. And which is really, really cool. Although I got sweaty hands. Yeah, I got sweaty hands. But letting it go. Letting it go. It's good. It's better to let it go than to take a loss. An unnecessary loss. And then later I would beat myself up. What's it worth? What's it worth? Anyways, traders, I hope that you learned something from this video, that it helped you, that you saw that you are not alone, that you are experiencing FOMO as I am, as probably a lot of very good traders are. So it's quite normal, right? It's quite normal to want to be in a stock that is moving quickly and with quite a lot of momentum. So that's it for me. This is Albert with Trading Diary. I'm signing off. Trade carefully. Goodbye.